period. But what we're going to talk about here is really the world's greatest technician, if you want my honest opinion about it. A lot of his techniques, a lot of his methodologies led him to amass a pretty sizable fortune back in the 20s. Back in the 20s, it was rumored to have been somewhere in the neighborhood of $50 million, which is, in today's inflation-adjusted money, is a significant chunk of change. So about a little bit of where he was coming from. Now, Gann's methods are, there's a variety of them, but some of the big ones. It really comes down to breaking the markets up, to coming in and looking at the markets through division, by dividing the markets into halves, into thirds, into quarters, into eighths, and really breaking things up into sections that he can really understand where the market is heading based on its behavior. Now, a major part of Williams' method comes down to time and price convergence. Not only was he there to identify where price actions should settle down, but in very important timing markers to really identify where those turns in time are going to come in. Now, some of the major parts or numbers of Gann theory, there's a variety of them, 8, 36, 72. This is by no means a complete list, but some of the challenges that most people have when we are talking about Gann theory is that his original work is incredibly cryptic. It is very difficult to read. And because of that, it gets very misunderstood and discounted. People open the book, they read it and say, this doesn't help me at all, and they sort of just pass on it. They don't really delve into some of the usable parts of what Gann was trying to communicate. Now, again, there are many facets and areas of Gann that we could study, but today we're going to be talking about the square of 9. Now, a little bit about the square of 9. At the end of the day, what we're talking about here, we are talking about identifying support and resistance levels. That's what this is about. Now, this is going to be very unconventional to most of you in terms of how we use Gann theory, and specifically the square of 9 portion of that theory, to identify those support and resistance levels. But at the end of the day, that's what we're talking about, identifying very clear floors and ceilings within the market. And that not only can be used for price action, but it can be used for timing. Now, one of the major ideas behind the square of 9 theory is that we are going to be working off of daily, weekly, and monthly time frames. However, the title of the presentation is Day Trading with Gann. Those are at two very opposite ends of the time interval spectrum. Daily, weeklies, and monthlies don't typically have a whole lot to do with 1-minute and 3-minute charts where most day traders like to spend their time. However, through the law of vibration, we are going to use those major daily, weekly, and monthly turning points to generate levels that can be used in a day trading environment. Now, when we talk about the law of vibration, one of the things that I use to sort of describe this is to think about throwing rocks into a body of water. Whenever you're standing on the shore and you throw a rock into the water, that rock, as soon as it hits, it generates a set of ripples. And those ripples are really proportional to the size of the rock. So if you throw a very small rock, you get very small ripples. But if you throw a large rock, that rock will generate very large ripples. And the same kind of idea is appropriate for the square of 9. The bigger the rock, in this case, the time frame, daily, weekly, and monthly charts, the bigger the vibrations, the bigger the ripples that we will see in terms of the market. So think about that particular piece of it. Now, this will be the first time some of you have ever seen one of these before. This is a Gann wheel. This is a chart. Like, it's very different than most traditional contemporary charts where you've got bars or candles or things like that. This is a chart nonetheless. Very different, but there's some facets to it that we need to understand to use this in a very, very practical way. Now, the first part of the Gann wheel, and I'm going to just turn on some of my drawing tools here so I can kind of illustrate these different things. You'll notice here we've got these numbers within these areas. Now, these are here to represent price. The other part of the Gann wheel, we have degrees. And you'll notice that we have this circle that goes outside of these price levels, and we know that a circle has 360 degrees. Well, through the lines or the degrees of the circle, all right, basically these angles that you see here, these are here to help identify the price levels that are going to become important. So understand that there's three parts: price, degrees, and angles. And essentially what we're doing here is we are going through and we are going to come in and first focus on price. Now, if we were to look at the inner part of the Gann wheel, that first middle piece, you'll notice that we have that number 1 right here, all right? That number 1, what we're doing, let me go back a couple of slides here. What we're doing is we start with the number 1, we move to the left to the number 2, and we work in a clockwise motion, and every time we make a complete rotation, all right, we have gone around that pyramid. So everybody, I'm sure, is familiar with the Luxor Hotel in Las Vegas. Imagine that we are taking a top-down view of that hotel. This is a pyramid. Over on, we've got a four-sided pyramid. This is the top, and all we're doing is we are rotating clockwise around this. And I got to get rid of this arrow here. There we go. Okay, I'm just going to use a different one here. There we go. So as we move to the next piece out, we are always going outward and increasing this, and it simply works in this clockwise way, and we essentially are building a spiral starting from the top of that pyramid. Okay, so stay with me here. This is the toughest part. Once we go into the charts, you will really see exactly what this is all about. Now from here, as we go into the get my presentation to cooperate. I hope it's not crashing again. There we go. Okay, this is what we've got. Now outside of the pyramid, you'll notice we've got those degrees, and essentially what we're doing with the degrees is exactly what we talked about when we were talking about the various angles of what Gann was focused on. When we go through and look at the various angles across these degrees, you can see here that we've got our 0 degree. We come up here, we've got 90, 180, 270, and all the way back takes us to 360 degrees. Now what we're doing with the angles is, again, we are going through the significant pieces here. We're going through at 90 to 270 and 0 to 180. Now these are what are called the cardinal angles. All right, so in terms of a cross, these are the cardinal angles, and the numbers that fall along this line are basically what we're going to be using for support and resistance when we apply them to the chart. Okay, now you'll notice here we also have the corner angles, the green lines that you see here. We are going through from corner to corner, and we're doing that on all four sides. All right, now again, think about what I said. Gann liked to do what? He liked to break things up into quarters, into eighths. Well, look at this. In this section we have 1 quarter, we have another quarter up here, another quarter in the upper left, and the lower left, another quarter. So we're taking the Gann wheel, we're dividing it by 4, and then we're dividing it by in quarters again and getting those eighths. All right. Now, again, all of this will become relevant once we start going into actually applying this to the chart. And again, all we're doing is we're building a spiral out in a clockwise way, and we're looking for the numbers that fall along that line. Now from here, this is what we've got with the S&P 500 E-mini futures. What I've done here is I've gone all the way back to June 6th or July 6th, 2010, and you'll notice we have a low point here, and I am on a daily time frame. Okay, we're on that daily chart, and from here I have a low print of 102 3/4. All right, this is where the S&P futures made the low. Now we're going to make a note of this. 102.75, we're going to plug it into the Gann wheel. You can see here that that middle number, that starting point, 102.75, all right, all we're doing is rotating out, and let me go ahead and turn on my other cursor here, okay, and all we're doing is rotating out clockwise, and again, those angles, all right, those cardinal angles that fall along here and here, those lines are going to become support and resistance levels that we trade from once we go back to our chart. Now, from here, here's what we've got. In this case, as we move on to the next one, all right, there are, if I can get this, if I can get my presentation to cooperate, we'll be in business. Okay, so there are those angles, all right? We've got the cardinals, we've got the corner angles. And from here, we take the low from June 6th or July 6th, 2010, and we take the high point made here on February 18th, 2011. Now, whenever we use a low point, that low point is designed to generate resistance levels upward. So a low is going to find the resistance up. The high point is going to generate support levels down, all with that idea of moving clockwise around the Gann wheel. Now from here, this is what those numbers that fall along those angles are giving us. If we take those numbers and put them directly onto the chart, you can see here exactly how the price action is respecting those levels all along the way. From here, and there's a variety of them. Let me go ahead and just do it this way. All right, as we hit these angles, we do so with a fairly relatively good degree of accuracy, and knowing where those support and resistance levels are. We're not using Fibonacci, we're not using the line of best fit. We are looking for the price action to respect that law of vibration that we made with those big daily or weekly or monthly turning points. So again, very unconventional to the way most people see support and resistance, but understand that's what this is all about, just finding those forward-looking levels that we can begin to take some action on. Because once you've got that initial action, let me grab my question pod, and I'm going to just pull that over here. There we go. I see some questions coming in, and I want to, there we go. Okay, so what we're doing here, and I do have a couple of questions, I'll save them towards the end, but yes, this works on different markets, whether it's you know, a 3-minute chart, a 1-minute chart, and all we're doing is we're taking those major pivots, putting them into the Gann wheel, and then finding the numbers that fall along the angles and putting them on the chart. Okay, that's what we're doing. Now from here, all right, let's keep going. All right, here we are with a weekly chart of the S&P, all right, S&P futures. And you'll notice here I've taken 2 sets of pivots. Now, this is the reason we don't use this on the weekly time frame. We don't use the weekly chart or the daily chart to trade from. We use those bigger time frames to generate the levels. Okay, that's what we're using here. Because if I look at these levels on the weekly chart, that's nonsensical. I cannot make use of that. The lines are too close together. The power in this comes from dropping to a day tradable or even a swing tradable time frame. Because when I take that same S&P chart and I drop down to the 30-minute time frame, you can now see the levels that are being generated from those highs and lows off the weekly chart. In this case, the purple lines are being generated by the October 8th, 2007 high, and the gray lines are being generated by the March 2nd, 2009 low. And I have those exact values right there, 1586 3/4 off of the high in 2007 and 665 3/4 off of the March 2009 lows. And you can see with those highs and lows how the price action is respecting that. And just by knowing it, here we are a year, 2, 3 down the road, and the levels that were generated from 5 years ago are still relevant today, so you are able to throw it out there. And yes, we are going to go to the real-time charts, and I'm going to show you just from yesterday and from some other examples of how these levels are working. Absolutely. Okay? So from here, this is another example. This is a weekly chart of crude oil. This is one that I've taken the high point here of 147.27, taken that high point, and I've also taken the low point here of 33.20. Placed that 147.27 in the middle of the Gann wheel and taken all of the numbers that fall along the angles. Okay? Done the same thing for the low point. Put that 33.20 right in the middle of the Gann wheel, and from there, taken all the numbers that fall along those cardinal and corner angles. And then we put them on the chart, and this is what we get. From here, you can see how the price action has respected these levels, several years later as we keep hitting these points, and we do so in many cases right to the tick. Not exactly every time, but close enough where we can say that, yes, we have a very clear area of support, a very clear area of resistance. And what I look for when I am trading with this is I'm looking for areas where the square of 9 levels are coming together. It's these areas right here where you can see we've got the gray and the purple lines together. That indicates a reinforced level of support or a reinforced level of resistance. And when we get these big areas, these big gaps between levels, that is where the trending behavior is most seen. That's where we get that really strong follow-through that we're trying to get a hold of as traders. We're trying to get those trends. We're trying to get in front of those serious moves. Well, by knowing we've got a lot of clean air between this set of levels and this set of levels, it allows you to hang with the trade a little bit later, a little bit longer. Okay? Now, from here, let's take it. This is actually from yesterday. What I've done is I have taken the Japanese yen futures. I've taken the Japanese yen. This is the 6J contract, and I'm using the front month continuation symbols. So this is the pound F, and by doing that, it gives me a much more complete chart that I can use these levels to find those support resistance lines when I go to a day trading environment. So here we are working off the daily, and what I've tried to do here is to do this in a logical way where we are correlating the color of the arrow that you see here with the color of the line that is being generated by that high or low point. So in this case, we're using a high here, and down in the lower left, you can see that for that bar, we had a high of 106.63. So we put that into the Gann wheel, and we put those lines on the chart. Well, from a 30-minute basis, this is what we have, and this is yesterday's trading. Okay, this is all from yesterday's session, and over the last from yesterday and from the earlier parts in the week. But you can see multiple hits. In this case, we've got 10 different areas where the market has respected that square of 9 level. All right. Now we keep going. Let's take it a step further. Let's keep working with that same daily chart. In this case, I'm using the low point of 0.9852, made back on July 8th of this year. We pop that into the Gann wheel, and these are the levels that get spit out. You can see here we've got several hits along those angles, and that's what we're trying to capture. We're trying to get those very, very strong reaction points, and from there we know where those levels are well in advance. Again, we're using a number that occurred, back here in August, and here we are 2 months later, and this is what we've got. So now I'm using the high point. I'm using this big consolidation pattern that we've got with the yen 104.40. That's our high point. What levels did it generate? Well, we can see multiple hits here along these lines. And E-signal has some pretty nice features that allow you to bring in, to get these lines on your chart very quickly, very easily. All right? So what we keep doing here is we keep using these highs and lows. And I typically run anywhere from 3 to 5 sets of levels. Beyond that, it becomes overkill. You don't have to have 20 sets of levels to make a good decision. 3 to 5, I have a real clear idea of where the major points are and the areas where I want to focus my trading. So in this case, here we are going to September 11th, 2013. We are using the 99.39 low. And you can go to your charts, check this. You'll see the exact same prints. We'll take that 99.39 low. What did it give us in terms of price action? In terms of the levels, you can see multiple hits, again, over and over again. And, all by themselves, it gives us a pretty decent look. But the power in this is when you put them all together. All right? Here we are looking at the 103.57 high. There's the levels that 103.57 high gave us again and again. And again, what we want to do here, put them all together. And now you've got a variety of areas that you begin to focus on in terms of your trading. I'm running about 5 sets of levels here, and you can see the inflections. You can see the areas where we are very clearly running into an issue. Here, we come down, hit, and it's when these areas come together where we have multiple lines coming together at the same point, those are where the strongest inflections are occurring. So you can see a good point of support, runs us up, hit, runs us back down to that good support level. We've got some resistance, and you just see it again and again and again. And people say, well, what do you do with this? What do you do with this? Well, you combine it with what you know. You combine it, if you're a candlestick trader and you're watching these levels and you're looking for dojis, these are really key areas about where you want to focus your attention. All right? Now, if you're a stochastic trader or you're using a stochastic to make your decisions and you're looking for divergence or something to tell you that the move could be ready to turn, when you see a divergence in your stochastic down here at a level, that is all that's doing is giving you more and more confidence about where you want to put those trades on. And the degree of accuracy in which this happens is incredibly powerful. Now, this is a 30-minute chart. Can we do anything with this? Well, if we want to trade the 30-minute chart, we have enough information to do that. But what happens here if we want to trade something a little smaller? Let's go here, and we will come down to a 5-minute chart. For somebody who's day trading, look at the relevance. Those same levels that we charted on the 30-minute time frame, there they are on the 5-minute. And by knowing them in advance, it really makes it a lot more opportunistic, because day traders are not looking for, grand slam trades. If you get one, that's great, but day traders are looking to step in, bang out a few bucks, and move on to the next trade. Well, by knowing these levels, you're able to step in, get just enough follow-through that you can accomplish that goal, and again, move on to your next trade. All right? Now, from here, let's keep going. This is the 5-minute chart of the yen. Here's the 10-minute chart of the yen. And because these markets are fractal, meaning what happens on the big time frame happens on the small time frame, it doesn't matter so much what time frame you want to work from. It's knowing where the major levels are that is the most important thing. All right? Now, with that said, let's do this. I want to talk here a little bit, but we're not going to go into it in great detail. Whatever we can do in price, we can also do in time. And that's the beauty of the Gann wheel. There's multiple purposes to this. We can use this in a variety of ways. Not only can we use it to find support levels, and resistance levels in terms of price, but we can enter in a date. We can give a date of a major inflection point, all right, right in here, give it a date, a major turning point, and from there we work our way out clockwise, making that spiral each and every time, and we do it not with price, but we do it with time. And by understanding where those major time inflections are coming from, we now have an idea of not where price is coming in, but where time is coming in. Remember what Gann's major focus was: time and price convergence. It's when those two things come together that something is building a real focal point and a real potential for a trading opportunity. So we can do things like this to really focus in on those key inflections. Now from here, the big question, and this has already come up, I can see it in the chat here, you know, how do we get the square of 9 levels? There's a variety of ways to do that, okay? A Gann wheel typically are very, very expensive. Gann wheels, physical Gann wheels, can range anywhere from $400. I've seen them all the way up to about $10,000. They're powerful, and they do have some significant cost associated with them. The other way in which you can do it, eSignal has some EFS indicators that can be applied to the chart. Okay, they can be applied to the chart. They don't go as far as I do in terms of putting them on. I do all of this manually, and it does take some time. And there are subscription-based services that, like squareof9.com, where they will give you the calculations, you give it the inputs, it gives you back the levels that you need to incorporate. But the neat part about this is the fact that eSignal can incorporate these lines very quickly and very easily. Let me bring this up here. This is, I think everybody is able to see this. I hope so, because I can't. There we go. Okay, this is a daily chart of Apple. This is real time. This is about as real time as we're going to get. This is from yesterday's trading. Right down here, you can see it, 10/11/2013. Okay. One of the neat things about eSignal is the fact that it understands how to read Excel files. Okay, and with that in mind, I use an Excel file, put in all my square of 9 values, and then import it into the eSignal application. So what I've done here, this is again that daily chart. You can see I've got a high here all the way back on 9/21 of 2012, and you can see we made a high here. If I put my cursor right on that bar, we've got a high of 7.05 cents. That's where Apple peaked. Okay. Well, I have built an Excel file with those square of 9 levels so that I can put this on my chart very quickly and easily. Right up here next to the price magnet, you'll see when I mouse over this, it says import horizontal lines. Import horizontal lines. I'll take that button. From here, I've got a file right there, Apple SQ9 70507 high. I'm going to open that, and from here, as soon as I see my chart, there we go. All right, those are the square of 9 levels that Apple has generated from that 70507 high. Well, again, this is a daily chart. Those levels are too close together for us to do anything with them. So let's drop down to the 30-minute time frame. Let's go to something shorter term. And from here, all of a sudden, those levels become a whole lot more readable. You'll notice here, again and again, hit, 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 hit. And does it hit it like a switch swatch? I mean, many times it will. But even if it doesn't, I'm still able to get a very clear sense of where the support and resistance levels are for any market. And you can see this again and again and again. And I'm just going back in time to illustrate the amount of things that are going on there. Depending on whether it's a sell signal, somebody asked me, is this a sell signal? It all depends on what kind of strategy you're following. Are you trying to counter trend the market? Are you trying to just simply buy the bottom of a range? It all comes down to the thesis of what it is you're trying to take advantage of. But it's really about knowing first where the levels are. You can see these over and over again, and that's not what I wanted to do. There we go. Put that back where it belongs. And just using that 705.07 high, you can see the amount of levels, or the amount of areas, the focal points that we should be focused on. Let's say I'm just a trend continuation trader. Well, if I am using something like Advanced Get and I am looking for, you know, a buying opportunity, well, there's one right there. All right, got a nice little buying opportunity, and where are we coming in? Right into the square of 9 level. All right, but you know, again, combine it with what you know. Maybe I want to put a Fibonacci retracement to this. Well, how about that? Now I've got a square of 9 level combined with a Fibonacci level to give me even more confidence that this is an area that I should be focused on. So these square of 9 levels are very, very powerful. Not many people understand them or trade with them, but when you begin to incorporate them into your trading and doing some of the flexible things with eSignal, like importing these lines, it makes it for a very, very seamless process. Every trade that I take, every decision that I come to, I make the consideration with these square of 9 levels. Okay. Let me go ahead and see here. I think what we'll do is let me go back to our presentation here and talk a little bit about what we're offering here. Today it's really about using eSignal and using the data and a lot of the new features that are incorporated into eSignal 11 and making them a part of what you do every day. If you are interested in using eSignal and you want to maybe experiment with some of these line features, we will start a 30-day risk-free trial, and the second month will be free. If you have questions about that, give the eSignal sales team a call, 815-8256. And from here, what we're going to do is go ahead and just start tackling some questions. I'm going to leave this up so people can make a note of it and have all the contact information readily available and go from there. So let me go ahead and scroll up here because I want to make sure that I've got the questions out in front of me here. Let's see here. How do you calculate the numbers out from the center? Like I said, there's some EFS studies that will do this for you. Again, there are online services that will do this. I'm not going to recommend any. I'll just have you go and search for them. But if you Google square of 9, you will be able to come up with some that are out there. Let's see here. Are you using the actual price that traded that day or the adjusted price for each rollover? I am using the actual price, not the adjusted price. So, Sherry, very good question. I'm using the absolute value. Absolute value. So that right there is what is being calculated or put into the Gann wheel. All right. Does this work for different time markets? Day trade? Absolutely. I use it for stocks. I use it for futures trading, and I even use it for some of the currencies. When I'm going through and analyzing the currencies, that is the one that I'm focused on. Let's see here. The tool for importing the lines, it's right at the top of the program. I'll bring that back into the forefront so you guys can see it. There we go. Right at the top of every chart, just to the left of the price magnet, if you mouse over it, import horizontal lines. And this is what one of the Excel files that you're going to import looks like. Let me grab it and I'll show everybody what that Excel file looks like. I'll just bring it over to the other monitor. Okay, and this is what we're importing. This is the file that eSignal understands. Over on the left-hand side, you've got all of your square of 9 values, and then you have the elements of the line. Green line, solid, thickness, all of those basic line features. You can come in here and save this, and it will understand what it is you're trying to accomplish. Now, if you would like this as a template, all you have to do is email the eSignal team that contact information that I put up there. This right here is where you want to focus. Go down to where I want to be. All right. And this is, if you call them, they will make this template available to you. So if you start to explore Square of 9 and you find those price levels that you want to work with, you will have the template ready to go. All you have to do is put the numbers into the template. So let's see here. Scrolling up a little bit. And yes, absolutely. If you want to use the paper trading feature with the order manager, you can definitely do that. So, all right. Let's see here. Suresh actually made a good point. You know, I've gone through and drawn a bunch of lines randomly, and still, I found points on the chart where they hit. What is your thought? My thought is, if you believe this stuff and you want to use it, use it. If you feel that it's random and it doesn't have any sort of benefit to your trading, don't use it. I'm a big believer in using what works and discarding what doesn't. Do I think it's random? No, because the Gann wheel is a very clear calculation. All right. I've traded with it long enough that I use it. If somebody goes the other way and says, well, this is not something I want to do, then that's okay. We all trade differently, but this is exactly what I do for my day trades and my swing trades. It's very much a consideration of every trade that I take. So it's a good question, and I wanted to make sure that I address this. So the advanced get, a lot of the same tools are in there. And there's also some new features because of the trading platform is different, the code base is different. A lot of those types of tools are still in there, but it's in a brand new platform, a very stable platform, and one that has been well received by the industry. So, all right. With that said, everybody, let's go ahead here. We're going to go ahead and I have another question coming in from Brian. When you take a high or a low, you are taking the highest high or the lowest low of that particular bar, Brian. So if you're using a high point, use the high. If you're using a low point, use the low. And that absolute value in the middle of that Gann wheel is going to give you all those levels. Again, there's online services that do this. Square9.com is one. There's EFS indicators that you can download for free. And it's one that is good to make sure that you look into it before you begin to use it, but it is also a very powerful part of what I do day to day. With that said, we're going to go ahead here. I'm going to turn things back over to Thomas. Thomas, I'm sorry for the little issues there at the beginning. It's kind of set me off kilter for the presentation, but hopefully we got through it in a way that made sense to everybody, and the time was well spent. So thank you very much, everybody, for joining us. Thank you, ValueCharts, for having me, and I look forward to being with you again. Everybody go out, have a nice weekend. Thank you.
Thanks, Dwayne. Have a good one. All right, everybody, and that concludes today's ValueCharts Active Trader series. I hope everybody enjoyed it. I hope you have a great weekend, and until next time, God bless.